All right. Good morning, good afternoon, depending on where you're tuning in from. Welcome to our weekly mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Hopefully everybody is having a good morning. Hopefully everyone is doing well. Also, good morning, David. First one to chat in there this morning. We should be live both on Facebook and on YouTube. So if you guys can hear me out there, type in VV Nation into the chat. Let's get that going. There we go. Good morning, Drew. Hopefully you're doing well here this morning. Let me make sure. Yep, everything should be working fine. Good morning, Mark. All right, so welcome everybody. Hopefully everybody's doing well. If you guys are just tuning in and you haven't already, make sure to smash that thumbs up, like button right down below me. That way it helps us out with the stream, helps us out with YouTube algorithms, and gets us in front of more people who need it. So therefore, it helps continue to grow this awesome community. If you haven't done so already, make sure to do that here right now. All right, and with that, today we've got an interesting topic. Today we're going to be talking about, one, identifying when we should start getting prepared to protect our profits, and two, talking about a few steps on knowing when you should lock those profits in. Now, we've covered the 4 tips of knowing when to sell a few weeks ago, and today we're going to, instead of taking a look at more of that technical basis, we're going to talk about money management and money management rules and go over a few tips and tricks on how to really take advantage of that here. All right. Good morning, Jay. Hopefully you're doing well. BBBY, yeah. So it's definitely going to be a wild ride here today and over the next few weeks, I assume. So with that being said, let's take a look, as always, starting off at the very front at the homepage here. Then we'll dive into our topic of discussion. And then, as always, if you have stocks that you want to see analyzed, make sure to stick around towards the very end, and we'll analyze those stocks in less than 10 seconds. Please, no timeouts today. Hey, that's not up to me. You guys got to behave. All right, so looking at the markets right now, the Dow is down about 0.2%. The NASDAQ is essentially flat, same as the S&P. The VectorVest composite up just shy of 0.1%. Therefore, we do have one tick into the green there, so the market is mildly bullish. And VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And if we scroll down a little bit more, as always, if you ever want an update of what's going on in the market, VectorVest provides that for you every single night with the daily color guard report found right here in the middle. And then we want to take a look at the color guard, and we'll talk about the color guard in more detail in just a few moments. But when looking at the color guard, we can see that one green light comes from that price column. And if you're not familiar with it, the price is referring to the price of the VectorVest composite. The VectorVest composite is an arithmetic indexed average of about 9,200 stocks in the US market, and it gives you a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30 or the NASDAQ's 100 or the S&P's 500, but it's looking at 9,200 stocks as a whole. The second indicator we look at is the RT, or relative timing, and this is cast on a scale of 0 to 2. Now, the relative timing is looking at the short-term price trend in the market. So since the RT is above 1, that tells us the short-term trend of the market is currently up. But since it's yellow today, that tells us that it's flat day over day and actually falling week over week, giving us a little bit of worrisome signs here. The next indicator is the Bsr Bidisol Ratio, which is looking at the overall health of the market. So every single day here at VectorVest, we give a buy, hold, and sell rating on every single stock that we track. So if there's more buys than sells, the Bidisol ratio be above 1, as it is now at 1.97, which indicates overall market strength. But if we look at the overall trend, we can see the Bidisol ratio is higher compared to yesterday, but still lower compared to a week earlier. Then these 3 indicators are comprised to come up with our MTI, or our market timing indicator. This is looking at the underlying trend of the market, and it's cast on a scale of 0 to 2. So since the MTI is above 1, the underlying trend of the market is currently up. After that, we then get the trend column, which shows 2 parts of the trend each and every day. Now, the first part is looking at what we like to call the primary wave, which is just simply showing the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than what it was compared to 5 trading days earlier. The second part of the trend is just looking at the underlying trend, or the MTI. So since the MTI is above 1, the underlying trend of the market is also up. Last but not least, we always finish off with the calls column here in the color guard, and the calls column stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, we never want to ignore a confirmed call change. As we can see, we still remain in that confirmed up situation as of today. And last but not least, we always like to take a look at the advanced declines, and preferably we want to see a 2-to-1 bias. So therefore, if the markets are moving higher, we want to see twice as many stocks advancing than declining, and just the opposite if the markets are moving lower, to identify a good opportunity to jump in for the day, and also make sure that the probability is on our side that we get into the trade and have a successful start to the trade. Well, right now, 45% of stocks are moving higher and 41% of stocks are moving lower. So therefore, no real clear bias in either direction. Balaram, welcome to the VV Nation. Glad to have you here. Hopefully you're doing well this morning. Welcome. Glad to have you. So therefore, since we don't have any bias right now, we're probably best to just sit on our hands. I know we have that green light in the price column. I know it's saying VectorVest advocates buying safe, undervalued stocks. But until we see that Bidisol ratio, or the advanced declines pick up and get that 2-to-1 ratio, today's probably going to be a better day just to sit on our hands. All right, so with that, let's go ahead and start to jump into what we want to really discuss here today. And that's knowing not only when, but also how to make sure you're protecting your profits or locking your profits in. So one of the key things of knowing when, and that stays right here on the homepage. So if we go back to the color guard, we've talked about this many times in the past, but we're going to be focusing on it a little bit more here today. And that is mainly with the MTI. Now there's a saying here at VectorVest, and that's keep your eye on the MTI. And whenever the MTI gets to around 1.5 to 1.6, that historically has shown the market starting to look for a top. Now when it gets down to 0.6 and below, that historically shows that the market's starting to look for a bottom. Now, when I say starting to look for, that doesn't mean the second we hit that point, we start reversing course and heading the other direction. It just means that we're getting into overbought territory and that the market may be due for, a pullback or a correction. What that becomes in the future, nobody's going to know, but rather be on the right side of things rather than trying to leave it up to chance. So therefore, right now, we look at the MTI just a few days ago. We hit an MTI reading of 1.68, an extremely overbought territory. Now, once again, we can stay in that territory for quite some time. So therefore, this is the time that we should be checking our positions a little bit closer and applying our money management rules and maybe adjusting our money management rules if we need to. So let's talk about the money management rules here today. Let's see. Robert's also asking, is the VV mobile app always set to 15-minute delay? Is there a live streaming available? So, Robert, the only way to get the live real-time version of the mobile app is if you have real-time on the desktop. The highest it goes for just mobile versions is 15-minute delay or intraday data there. David's saying I take half my bullish profits when the MTI hits 1.5. It's very satisfying to take profits on a bullish day. I couldn't agree more with you on that one. All right, so let's talk about that though. Money management rules. So there's a few rules of thumb that VectorVest tends to prefer or goes over for any new subscriber or anybody, getting started with the VectorVest software. So the first rule of thumb is what we like to call the 1% rule. And before we get into these rules, let's all just set the stage right now. So let's assume we have a portfolio of $100,000 and we plan on getting into 10 stocks. So putting 10,000 into each stock, just to make the math easy for everybody and make sure everybody can follow along. So therefore, we have a portfolio of $100,000. We've loaded it up, now have 10 stocks in it. So 10,000 per position. Now let's get into the 1% rule. The 1% rule states that we should never risk or never lose more than 1% of the overall portfolio value in any one position. Well, the overall portfolio value is $100,000, so therefore 1% of $100,000 is $1,000. So if you're setting your stops, no stop should be more than $1,000 in each one of those stocks or each one of those 10 positions. Which if you put 10,000 in, that equates to about a 10% stop from your initial purchase price. Now, obviously you can do less than that, but no more than that. So therefore, if you have, 10,000 in your one stock, you have a 10% stop, which is equivalent to $1,000 or 1% of your overall portfolio value. That is the max you would want to give back on that position before just cutting your loss and reevaluating the trade and looking for something better at that point. So therefore, that's the 1% rule. That's going to set your max limit on your loss per position. So obviously, if you want to be less than that, I know a lot of people like to do 6 to 8%, but no more than that 10% per position. If you use a 1% or if you use a 1% position size model, it will take 690 losing trades to run down a $100,000 account to $100. Well, 690 trades, losing trades, that is a lot of trades there that you could potentially lose. So hopefully probability, and that's why we use VectorVest, because it'll put the probability in your favor, so that way you don't take 690 consecutive losing trades. So yeah, that's going to be the 1% rule. And if you guys are writing this down, if you guys have questions or need me to repeat anything, please don't hesitate to let me know in the comments or in the chat. I'd be glad to answer that there for you. Dave is also saying, if you use a 1% or 1% position size model and have a 2-to-1 risk to reward ratio, it will take 35 trades to double your money. That's not too shabby there. All right. So that is our 1% rule. The next rule of thumb is setting yourself a target. This is probably one of the most overlooked aspects of money management from my experience working with thousands of customers over the years. And the target really is more of a personal preference there. So, if you're more of an aggressive trader, short-term trader, you're not going to be shooting for the gains that somebody who's buying and holding for 1 year, 5 years, 10 years is planning on shooting for. So therefore, depending on your own personal style of investing, you may adjust your profit or you may adjust your target accordingly there. So if you're more of an aggressive trader, maybe you're looking for 30 to 50% gain. If you're more of a long-term investor, maybe you're looking for more of a 100, 200, 300% gain over the course of that span that you're planning on being in that trade for. But whatever that target is that you find suitable for your own personal investments, set that in as a line of standard. Write it down and set that up so that way you can stay more systematic. But the best way to figure out what you're comfortable with is be honest with yourself and ask yourself, what type of a return are you happy with getting on an investment? Once again, if you're shorter term, you may be comfortable or you may be happy taking just a quick 30, 40, 50%. If you're longer term, once again, you're going for that longer gain. So therefore, you have to ask yourself and be honest with yourself, and whatever that answer is, set that as your target. All right, so now let's recap. You now have a line in the sand to know when you're going to cut your loss if you get into the position it doesn't go your way right out of the gate. You also know when that position, if you get into it and it starts running, when you're going to look at taking your profits. But there's a big gap in between your target and your max loss. So what do you do to manage that in-between movement? Well, that's where the 50% rule comes into play. The 50% rule is simply stating anything over a 10% gain in your position, you should never give back more than 50% of that total profit. So if you're in a stock, let's say you got in today, and all of a sudden it runs up 30%. Well, then at most, if it starts pulling back right afterwards, the most you want to give back is 15, or is when you get down to 15% or 50% of that total max profit that you had. But obviously you could, take your profit earlier, but no more than 50% of that total profit. So therefore, at least you're walking away with a 15% gain. Granted, you didn't nail the exact top and take that 30%, but at the same time, you now have 15%. You can get back, or you can always get back into the stock at a later time if things still look favorable and you still like where that stock is. But at least now you're not risking giving all that gain back and then letting it end up turning into a loss and taking that 1% or taking that 10% stop on the loss side. So this way, it'll help avoid or help mitigate any major potential losses, and also make sure that you stay systematic once again and locking the profit in. I think we can all agree. And actually, let me get your guys' opinion. So would you rather take a small win, or would you guys rather take a loss? Type in 1 into the chat if you'd rather take a small win, or type a 2 into chat if you'd just rather let it end up hitting your max loss and taking that loss. Let's see what you guys think. I think I know the answers, but just want to make sure we're all on the same page here today. Seeing some ones showing up. I love trailing stop losses. I typically use 5 to 15. And Sadiq, yeah, trailing stop losses are totally adequate. I personally don't use trailing stops as much as I probably should, but trailing stops are a great way to, lock profit in. And that's actually what we're going to be moving on to next. I want to make sure, though, everybody is on board and understands the 1% rule, setting yourself a target, and also the 50% rule of making sure that you're locking your profit in. So once you have those, now let's all combine it together. We talked about the homepage. We talked about the timing, the MTI getting to 1.59. We've talked about money management rules. That way you have the groundwork or the framework to develop your own systematic approach to it. Now let's combine the two together. So let's say, once again, you have that $100,000 portfolio. You're using, just for simplistic purposes, a 10% loss from your initial purchase price, and you're looking for a 50% gain for your target. So if you hit a 50% gain, you'll take that 50% gain, move it to the sidelines, and then, reinvest it or see what's going on and wait for that next opportunity. Well, if you're one of those investors and you all of a sudden have VectorVest and you see where the MTI is at, and let's say you're only at a 30% gain so far, and the market's getting top heavy, that we're starting to get towards the upper part of this most recent run, aka MTI is above that 1.6 reading. Well, instead of just saying, okay, the market's at a top, maybe I should just take my profit, move to the sidelines. No, because markets can stay in that overbought territory for a while and you'd be missing a lot of gain. So going back to Sadiq's comment about the trailing stop, one possible avenue to take is, if we get to these overbought territories, instead of, setting at 50% target, you already have 30%. Why not, change your stop at that point to a trailing stop? That way, as long as the stock continues to run, you're good. But if the stock starts pulling back at all, if, the market top is in, the market start heading south, you're guaranteed to lock that profit in. And you could use that if you tighten your stops up at that point to make sure you're, locking your profit in. You'll be a lot happier as an investor. And when the market does finally reach that bottom and you're ready to get back in, you're going to have a lot more capital to be able to reinvest, and that will help grow your portfolio at an exponential rate or compounded rate there. Let's see. Thank you, Mark, for answering some of those. I don't know anyone who would rather lose money. Hey, there's people out there that, I don't know. You apparently have never been to Wall Street Bets. A lot of those people like to lose money. They're willing to make some crazy trades, and they enjoy losing money. Not all of them, but there are some of those people out there. Can't go broke cashing checks. That's right. I like trailing stops. However, my main broker ally did away with trailing stops. Well, so that is one of the issues. You have to. This is where it comes down to you as an individual and your personal, or what the tools you have available to you. But yeah, you do have to make sure that your plan is able to be done with your broker. If you don't want to necessarily put stops in with your broker, then you can always manually do it. This is something that I did when I first got started here at VectorVest. I didn't really have a whole set criteria of money management rules. I was just simply shooting from the hip, essentially. And, oh, that's up a little bit. I'll take my profit off of that. Oh, that's down. All right, I'll let that ride. Then it's down some more. All right, finally, I'll just cut my loss. Well, so once I started getting more systematic with based from the VectorVest teachings, I started one of my personal favorite things that I did was I had a journal, I had a little notebook, and every single trade I would get into, I'd write the ticker symbol down. I would have 3 columns: my entry price, my percent stop on my loss side, so the 10% based off of what my current entry price was, and then my gain, my target, and I would calculate that price. So that way, I had it written down and I could systematically follow it, stay less emotional about it. And it really helps, learn that discipline of being able to manually control your stops rather than having to set it with your broker. So that is one thing I would definitely recommend. If you're, if that is something that you've had an issue with, following and staying disciplined to the stop criteria you've set, well, get a notebook and start writing them down by hand. I don't know, something about writing it down, and seeing it visually is definitely, is definitely a better way to learn for a lot of people. Audio is choppy. Good old YouTube. So I apologize for this, folks. YouTube has been having some buffering issues over the last few weeks. And I just got the message once again, once you guys started saying something, YouTube popped up a message that the video is having smoothing issues or buffering issues, and they're working hard to get it fixed. So yeah, I apologize for that. Anybody on Facebook having the volume issues, or is it just simply YouTube? That's what I'm looking to see. Hey Jay, I know you're on both. If you can hear me out there, Jay, let me know if you have the audio in and out issues over on the Facebook side. Because I keep getting the message. Oh, let me just type it into chat here real quick. Just YouTube? All right, that's what I was thinking. Thank you for that, Erica. Yeah, so a lot of people saying good now. Well, yeah, I wasn't talking, no wonder. YouTube is having some buffering issues once again. And it's interesting because everybody over on our Facebook side has just confirmed that there is no issues with the audio on the Facebook platform. So sorry for that, folks. Unfortunately, it is YouTube's specific, so I have no control over YouTube with that. But yeah, so where were we? Trying to get back to it. Switch to desktop works. Phone was bad. Yeah, for some reason, it's been going on. I've noticed it with a lot of other streams as well. On YouTube for the last couple of weeks, they've been having a lot of buffering issues, and it looks like they still haven't been able to resolve those. So unfortunately, there's not a whole lot I can do from my end. I already set YouTube better now. Well, it's still giving me the issues there, Ryan, so we'll have to wait and see. All right, so going back into it, getting yourself a journal. If you're new to investing and you want to become more disciplined in your investing, you want to be more systematic, try to remove your emotions out of your investing, that is by far one of the best things I could possibly help you guys out with for advice is get yourself a journal and write down all of your positions, your entries, your exits, your entry price, your max loss price, your max gain price, and your exit price all down into a journal. And that way you can keep track of your trades. And something about writing it down by hand just helped me personally learn it or, ingrain it in my brain, if you will, a little bit better. And that helped me stay more disciplined there as well. So hopefully that can help you guys for anybody that, has a big problem or big issue with staying disciplined. Hopefully that can help you out like it did with me. You can recommend people to stream via Facebook for now. Yeah, Nick, that's what I've gone ahead and done. I've had to do that because, I'm still getting the error message on YouTube right now. I don't know, Lauren. I don't know. For the past 10 minutes. Unfortunately, out of my control. All right. Dear diary. That's right. All right. So for anybody sticking around, I do appreciate you guys sticking around, dealing with the issues, and hanging out with us. Why Facebook or YouTube gets their act together. Hey, Maria, VV Nation in the house. So hopefully over on our Facebook side, you guys shouldn't have any issues going on right now. So you guys should be good. All right. So that's going to really be the main thing that we wanted to talk about, is one, talk about, having money management rules in place. Two, giving you some framework. Obviously, you can customize those a little bit, tweak them to fit your specific needs a little bit better, but giving you the framework to identify those money management strategies to help stay disciplined in your positions. And then three, giving you guys some suggestions on how to handle that, or combining, the market timing with the money management rules, and how that can really supercharge your profits or lock in those profits and make sure that, you're taking more wins rather than, letting some of those wins turn into losses and then just treading water in your portfolio. Because, compounded rate of return tells us when you're able to take your profits and then reinvest at the lower end of the market and allow it to run or continue to run, you are going to be a lot better off, and your portfolio will grow a lot faster than you've ever realized. So take advantage of compounded rate of return, take advantage of the market timing. If you have that portfolio, or if you have some gains in your positions, you see where the MTI is, doesn't mean once again that we've hit a top, just means that, we're close to that top. We've seen it in the past where the market continues to slowly grind higher over the next several weeks or months. We've also seen right when it gets to that level, it instantly starts turning around. So there's no guarantee of when that exact top is going to be, but we don't need that to be successful in the market. What we need is to know the rough idea of when we're getting close to a top and when we're getting close to a bottom, so we can adjust our portfolios appropriately there. All right, so if you guys have any questions regarding any of those rules, or need me to repeat any of those rules, or go over what we've covered, don't hesitate to let me know down in the comments below or down in the chat. I'm fine with doing either or. Also, since we've got a lot of people now just popping up over on our YouTube or our Facebook side, if you guys are on our Facebook page and you haven't already, smash that like button, hit that share button, and if you haven't already followed the VectorVest Facebook page, make sure to do that as well. Do you have any stock examples you can show information with, like a bottom fisher? Ryan, not on the mobile, because the mobile is not really going to have the back testing capability or quick test capability to show previous performance. So unfortunately, I'm not going to be able to really demonstrate it in that sense, the full aspect of it. But yeah, you can definitely do that, with any stock that you want to take a look at. CSIQ earnings moving. There you go. Femi, you got to be more specific. Unfortunately, I'm not going to spend the next 30 minutes going over what we just talked about for the last 30 minutes. You can always go back and watch the replay as well. All right. So with that everybody seems to have a pretty clear understanding of them. So if you guys have stocks that you want to see analyzed, make sure to start putting those in the chat, putting those in the comments. Let's get those going, and we'd be glad to start taking a look at those and analyze your stocks in less than 10 seconds with the mobile app. Why we're doing that, just for record. So Femi, we talked about money management rules, 1% of our 1% rule. We talked about the 50% rule, and also setting yourself a max target. Then we also talked about market timing, knowing when the market's starting to look for a top. Then we talked about combining the two together and how to adjust your money management rules based off the timing to give yourself the best possible chances of success in your portfolio. So there's the quick highlight. All right. Also, I see we still have over almost 100 people still on the YouTube side. If you guys are still on the YouTube side, smash that like button right now. Help us out with the YouTube algorithms. If you guys want to see more of these, you got to do that. All your help, all the thumbs up and the likes helps keep the channel going, helps keep the channel growing, continues to grow the community, and it gives us the ability to do these streams on a weekly basis. So if you haven't already, make sure to do so right now. All right, with that, let's go ahead. Start take a look at your guys' stocks here today. So very first one I saw come up, one that's been talked about a lot here, BBBY. So this is a speculative trade. You have these 4 indicators here at the bottom. Before I rush myself, let's make sure everybody's on the same page. I get excited sometimes and I have a tendency to rush. So sometimes I need to slow down, and right now is one of those times. Let's make sure everybody's all with it together. So these 4 indicators at the bottom are all going to be cast on a scale of 0 to 2. And above 1 is good and below 1 is bad. So the first one we look at is the RV, or relative value. The relative value, actually, we'll just go right here, the stock analysis report. The relative value is looking at the long-term potential of the stock over the next 1 to 3 years. As we can see with Bed Bath & Beyond, has poor long-term potential over the next 1 to 3 years based off the historical fundamentals. Next indicator is the RS, or relative safety. It's basically the amount of risk involved with the stock compared to the average stock out there. So above 1 tells us there is less risk with the stock, below 1 more risk with the stock. As you can see right now, 0.71 for Bed Bath & Beyond tells us there is a lot of risk with the stock. Since the RV and RS are both below that level of 1, that identifies the stock as a speculative trade. The next indicator we're looking at is the RT, or relative timing, which is looking at the short-term price trend of the stock. On a scaling of 0 to 2, if it's above 1, the short-term trend is up. Below 1, the short-term trend is down. So at 1.52 tells us, even with today's pullback, the stock on a short-term basis is still in a uptrend here. And a pretty strong uptrend to add to that. The last but not least is the VST, or value, safety, and timing. This is a combination of RV, RS, and RT all into one. And since it's cast on a scale of 0 to 2, above 1 tells us the stock is favorable from both a fundamental and a technical basis. Below 1 tells us the stock is unfavorable as the overall picture of the stock. So with BBBY, because of the strong RT, that's offsetting the weak fundamentals, so therefore making the stock favorable for the time being, or fair for the time being. Now, as a speculative trade, I will say this. This is one that can move very, very quickly. I'm not really going to get in. If you want to see the my thoughts on the news that's driving it down here today, go check out my Twitter. I talk about meme stocks or heavily manipulated stocks quite a lot, especially GameStop, now Bed Bath & Beyond. But if you want to see that, head over to Twitter if you follow, and you can follow me there. PRFrance88 is my Twitter's handle. So if you want to follow me and get my thoughts on that, you can see it right there. So yeah, that's Bed Bath & Beyond. You can see it's down here today right now, coming off of its highs of 30 or so. Now pulling back a little bit, but definitely well off of those lows. I'm not gonna make predictions, but I could definitely make the case that we can see it continue to climb higher from this point that it's at right now. Not saying that it will, just saying that I could see the validity to it doing that. All right, let's get into the next one. AAPL. Apple, good long-term potential, less risk associated with the stock, really strong short-term uptrend. So overall, stock is favorable. EXROF. EXROF, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, stock is not favorable. GME, poor long-term potential, does have more risk than the average stock out there. It is in a slight uptrend on a short-term basis, but not enough to offset the amount of risk. So therefore, the stock is currently not favorable at this time. TNXP. Okay long-term potential, better than average, but it does have a lot of risk associated with it. It's in a steady free fall. Overall, stock is definitely not favorable here. SHOP. SHOP, poor long-term potential, a little bit more risk than the average stock out there associated with it. It's in a slight decline. Currently, the stock is not favorable here. Sadiq, go back and watch the replay of today's stream. We literally talked about that. All right, getting over to the Facebook side, since I know a lot of people are tuning in from the Facebook side. Give me one second here. Pop out. There we go. Now I can see it easier. Let's see what you guys got planned here today. Google. All right. Googl. So Google, great long-term potential, less risk associated with it. You're in a steady uptrend. Overall, stock's favorable. KC, welcome to the VV Nation. Hopefully you're doing well. Everybody, welcome him or welcome them. Thank you for hanging out with us today. Glad that you're glad you could be here. All right, EVGO, poor long-term potential, a lot of risk associated with it. You're in a really steady or really strong short-term uptrend, even with the pullback right now. But unfortunately, not enough of an uptrend to offset the amount of risk. Therefore, the stock is not favorable right now. UCO. So UCO is going to be an oil ETF, and it's a leveraged oil ETF. With any ETF inside of the VectorVest database, the RV and RS will always be pegged at 1. Why? It's because they don't report quarterly financial reports. They don't have earnings, balance sheets, that sort of thing. So therefore, the fundamental indicators are always going to be just neutral. So when looking at the RT at 0.48, it tells us it is in a steady decline. So overall, right now is not the time to be long in this ETF. CVE, great long-term potential, a little less risk than the average stock out there. However, timing is of the essence. Right now, RT at 0.75 tells us it is in a steady decline. So it's a good stock, just not the right time to be long in it. LABD. Whew. This thing, looking at the RT, 0.11. Really strong downtrend. Basically free falling right now. Therefore, right now is not the time to be long in it. If you want to take this as a potential bottom fishing play, wait for signs of a reversal, then maybe. But right now, you got to be extremely careful with that, especially since it does have, or it is a 3 times leveraged. QRHC, good long-term potential, but does have more risk to get to that potential. You're in a nice steady uptrend, so overall, stock is definitely favorable here. ZIM, good long-term potential, but it has a lot more risk than the average stock out there. You're in a steady decline. Overall, it's a good stock, just not the right time to be long in it. Yeah, definitely not a trade for a retirement portfolio, Mark. All right, Ford, good long-term potential, but it does have more risk associated with it. You have been in a nice, strong short-term uptrend, so overall, stock is still favorable right now. BLNK, poor long-term potential, a lot of risk associated with it. You do have really strong short-term momentum to the upside currently, so overall, stock's about average though. A little bit better than average, but you know, we want to see that RT pick up more to offset the amount of risk involved with that stock. What do you think about the near perfect indicator? When it's a buy point, almost always at least one of the 4 categories are below. I mean, it's a great setup there, Nick. I mean, I don't know what else I can add besides what's already been said. So yeah. A lot of people enjoy that that layout there, so I'm glad to see a lot of people in here enjoying it. It's definitely been a fairly successful trading plan. All right, let's see. VERU, poor long-term potential, a lot of risk associated with it. Even with the 12% drop right now, you're still in a really strong short-term uptrend. So overall, the stock is favorable. So Robert, I do the mobile coaching. So therefore, I want to use strictly the mobile account. I don't want to have the desktop version, the desktop account, and then have people see stuff that is associated with the desktop that, they think they maybe that that's what it comes with. And then they get upset because they can't find it, and all of that. That just creates more headache than it's worth, to be honest. All right, so yeah, VERU, overall stock is favorable, even with the 12% drop right now. BMV, all right. BMV, BWV, that's what it is. There we go. BWV. Was this the one that Glenn was talking about yesterday? Well, we know who's going to be winning next week's stock picks. All right, so BWV, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, the stock is not favorable. SJT, good long-term potential, about average risk associated with it. It is in a really strong short-term uptrend. Whoa! Hey, Glenn! 1 second. Hey, Glenn! All right, we're back. So yeah, 2 o'clock. If you guys are watching at 2 o'clock, you guys should expect a nice, fun surprise. All right. On that though, let's go. So SJT overall stock is favorable. Let's see what else we have. We'll do a couple of more here. CCJ. Glenn is in the John. No, Glenn is. Glenn's right across the wall from me. All right, CCJ, good long-term potential, does have a little bit more risk than the average stock out there. It is in a slight uptrend. Overall, stock's about average. And we'll do one more here. Already did that one, Shay. Let's do TK. Nope. TK. Poor long-term potential. A lot of risk associated with it. You're in a strong uptrend, so overall, stock is favorable. So that's going to do it for us today. If I didn't get to analyze your stocks and you are already a subscriber with the VectorVest Stock Advisory app, just simply open up the app, sign in with the same username and password you used for the desktop or whatever you signed up with, tap on that little magnifying glass and type in, and you can do the same analysis we're doing here on the go. If you're not already a subscriber, click on the link down in the description below of today's video, sign up for the 2-week free trial, and put it to the test. As the old saying goes, seeing is believing. So real quick to recap what's going on in the market. Right now, the Dow is still down about a little over 0.1%. NASDAQ's actually starting to pick up a little bit, now up about 0.3%. S&P 500 up a little over 0.1%. VectorVest Composite up about 0.1% so far. So therefore, we still have one tick into the green. Looking at the color guard here at below, price is still green. RT is still flat day over day, but lower week over week. Bidisol ratio starting to pick up a little bit more than where it was, but still lower week over week. Looking at the advanced declines, still sitting at about 1-to-1 ratio. 45% of stocks moving higher, 42% of stocks moving lower. So therefore, no real bias that we see with the advanced declines, telling us today is a great day just to simply sit on our hands, manage the current positions we're in. So on that, it's been my pleasure being with you guys. Thank you all for hanging out. If you haven't already, make sure to smash that like button, subscribe to the channel so you get updated on all the content that we have coming out for you throughout the week. And until next time, take care, adios, and toodles.